Welcome, traders. Today you will learn how to use the Relative Strength Index indicator to initiate a buy and sell setup trade opportunities in the financial market. If you're using MetaTrader MT4, you can attach the indicator on your MT4 chart. To do this, click on the Insert option at the right corner of the MT4 or MT5 trading software. Select Indicator option. Move your mouse to select Oscillators option, and navigate right to select the Relative Strength Index. While on the trading view, you can attach the indicator by clicking on the Indicators and Strategies option here. Navigate to Built-ins option, move mouse to the right-hand side here, and scroll downward to search for the Relative Strength Index indicator. So what's the Relative Strength Index? The Relative Strength Index, RSI, was developed by J. Wells Wilder. The Relative Strength Index is a momentum-based technical indicator which is used by traders to measure the price of a financial instrument. RSI is similar to stochastic in that it identifies overbought and oversold conditions in the market. This measurement shows the bidding up or down of the price of a financial instrument. This measure fluctuates within the value of scale of 0 to 100. The 30 value generally indicates oversold of a financial instrument, while the 70 value and above indicates overbought of a financial instrument, although traders may tweak these settings here to suit their personal value of interest. But it's advisable beginner traders should utilize the default settings for this indicator. As we can see here, the default settings are the 30 and 70 scale value, while the period is 14. So how does the RSI indicator work? There are two ways in which a trader can implement the RSI to detect trade setups in the market. One, for trade entry and exit strategy through the crossover above the 30 scale value or below the 70 scale value. Two, for trade entry and exit strategy through divergence formation. To implement the crossover of the 30 scale value or below the 70 scale value, we need to look out for a market with a wide range of double top or double bottom. Once we find this type of market structure, we need to see a strong close above the 30 scale value or below the 70 scale value. Take note, this strategy is not as effective as the second strategy, which is the divergence formation. I would advise you to implement this strategy to close trades. Here on this chart, we can see the first bottom rejection by the 30 value scale of RSI. Here comes the second bottom after a wide range period of price fluctuation. To utilize this for a buy entry, simply construct a trend line on this RSI from the low high here to the low high swings here. A strong close of RSI swing above this trend line would have been the right time to buy these currency pairs. You can see how it led into a strong bullish rally upward. Same strategy of trendline combination with RSI to trade a bearish setup like we can see here. The second strategy is through a divergence system. Here on this chart, we can see the trend was in a bearish rally. Now, let's study the lower low of each bearish swing in relation to the lows of the RSI indicator. We can see the swing low here and here, which resulted into a double bottom. But on the RSI, the second low has a higher low than the previous low here. This transformation on this indicator suggests selling pressure is weak, and there's higher probability of a bullish move upward. This setup here is called a bullish divergence. We can see how it led into a short bullish move. Here comes another divergence system here. Here comes a low, and same low swing occurred on RSI. Now, check the second low swing on price chart. Relating this to the RSI, what can you see? We can see the RSI made a higher low instead of the lower low on price chart. And we can see how this trend was reversed into 670 pips. This is the effectiveness of the RSI divergence system. Let's search a bullish trend. on the strong, aggressive bullish rally here, we can see how RSI contradicted the bullish upward momentum. Let's relate the three swings on RSI to price chart respectively. Despite the price chart was making new highs, the RSI indicator was making low highs. This transformation on RSI here is called bearish divergence. We can see how it led the bullish rally into a bearish move in this market. The RSI is a powerful technical indicator that can help traders to detect profitable trade setups in the market.